Welcome back to BeIndian Audit Tool Power BI DAX UDF Library series number 3. In this video, we are going to see BeIndian Audit Financial Models AltmanZScore formula. This formula requires 7 parameters representing financial statement values like working capital, total assets, retained earnings, earnings before interest and tax, market value, total liabilities, sales. And it returns a formatted text string with a Z-score and a verdict on bankruptcy risk. First of all, let us see what is this Altman Z-score and why it is used. So this Altman Z-score is a formula, an indicator formula used to predict the likelihood of a company whether it will go bankrupt within next 2 years. Nobody can predict the future perfectly, but anyway, this formula is being used by so many auditors and investors to predict the likelihood of a company which may go bankrupt within the next 2 years. It was created by Professor Edward Altman in 1968, and this Z-score combines 5 key financial ratios from a company's financial statements. And it brings to a single number. That number provides a quick and effective measure of a company's financial distress. And how to interpret this number? The safe zone is the Z-score greater than 2.99, or we can say it as 3 and above. And the gray zone is 1.81 to 2.99. And the distress zone, which is dangerous, the company may go into bankruptcy, is when the Z-score is less than 1.82. Now, how to use it in Power BI? Let us go to Power BI and calculate this AltmanZScore by using our BeIndian Audit tool. Before going to Power BI, let me show you the data model. So I am having an Excel file. This Excel file consists of a table with 3 columns in the first sheet: date column, parameter column, and value column. The parameters are, as you can see, current assets, current liabilities, earnings before interest and tax, funds from operations. All these values are used for calculating our financial model function calculations. A realistic set of data is being prepared by me. I will share it in the description. You can see that some of them are balance sheet items, some of them are profit and loss account items. In other words, balance sheet items are snapshot items, whereas profit and loss items are period values. It has been earned during a period. So snapshot data cannot be summed up, whereas periodic data can be summed up. For example, sum of sales is meaningful. Monthly sum of total liabilities is not meaningful. Okay? Total liabilities is only a snapshot. Let us go to Power BI. To bring this BeIndian Audit Tool Power BI DAX UDF library, first of all, you have to install it. If you want to know how to install Power BI DAX libraries, we have already discussed it in our series number 1 video. I will share the link in the description for that also. This is the Power BI file I am going to share with you in the description. You can see that we have 2 tables. The first table is the date table, which I have created by using our own BeIndian Audit tool. Let us talk about this particular function in detail maybe in another video. So this is the data I have imported that just now we were seeing in Excel file. And this particular date column is being related with our date table in a simple data model, which is a star schema, where dimension in the surrounding and fact in the center. Now, let me go to the table view now. You can see that in the financial data, I have created so many measures. What are these measures? I go to this tax query view. Here, I have segregated these measures into 2. One is periodic data, another one is snapshot data. So here I have defined the measures like this. Financial data sales is equal to calculate the sum of financial data value, where the financial data parameter is equal to sales and parameter is equal to EBIT, parameter is equal to net income. Like that, I have created the measure to calculate any particular period, whatever may be the sales, EBIT, net income, and various other parameters here. Here you can see the measure formula. Z-score is equal to BeIndian Audit Financial Models AltmanZScore, which requires how many parameters? All the 7 parameters. So in this order, we have to enter working capital, total assets, and then retained earnings, EBIT, market value, total liabilities, and then sales. So once we have created this measure like this, now we can create a report like this. Let us see how to create this report. First of all, let me delete this Z-score values, and from our date table, I am bringing the month name here, where we can see April, May, June, July, like that 2 years period, all the month names are coming. So for these months, I want to calculate ultimate Z-score. So let us bring our Z-score measure also into the table. Now you can see every month what is the ultimate Z-score, how it is calculated, and you can see sometimes it is a safe zone. Once the sales here you can see, so the various measures, all the 8 measures here we are seeing. So how the market value is once it is decreased, okay. Once the sales is decreasing and then EBIT is decreasing, market value is decreasing, even the total assets, total liabilities, retained earnings, all these are increasing. Our Z-score is also getting down, and you can see the similarity between sales, EBIT, and market value of the company. And if it is go less than 3, we can see it is in gray, zone, and if it goes less than 1.81, it goes to distress zone, and once it comes back, then it becomes a gray zone, and then once it comes back from 1.81, it is again going to gray zone, then it again bounces back to safe zone. So like this, we can easily calculate likelihood of bankruptcy of a company in a monthly basis by writing a single formula. Thank you for being with me, friends. Let us meet in another video which talks about financial models, Olson's worst. Thank you.